Alright, so we're gonna make some trading contents. Today is July 29, Monday. Um, the plan is to do some live trading off the phone. So I'm not gonna use any computer to chart. It's just gonna show you how you can use your phone to chart. Anyway, you're not gonna have all the things you need, but it's enough to make you some money, or whatever. So we're starting with a top-down analysis on SPY. So here we have the starting of the trend, the uptrend. So right here is our swing, the first swing low, and then here is the second swing low. This is the first swing high. Get out of that. And then a swing low, and then we have another swing high all the way up here. This is very difficult to do with the phone. Anyway, this red line, this is the last swing high that we had. So if this move is over, we're looking for another swing low. All right, so let's put on a trend line. So here we go, that's the trend. So as you can see how the trend works, you have a swing low and a swing high, blah blah blah. So if this swing high is the ending of that upward movement, then we're expecting price to do something like this. What the hell? Let me go back to weekly. That's the weekly. That's the monthly. Showing you what the hell's going on here. That's the weekly. So on the monthly, it's showing where this could be the end of the uptrend. Let's draw this line real quick so you see the trend. Actually, that uptrend has a lot more room to go even higher, based on this chart. So we could see some more momentum going up, some more upward movement. Anyway, let's go down to the lower time frames. Let's look for a trade. So now we're on the weekly. As you can see on the weekly, we hit this level right here at 565, and we're showing a strong bearish engulfing candle, which could signal a potential bearish move. These lines, yellow, orange, and purple, those are like the moving averages. These really track the trend. So it will work if price stays above these lines. It's still in the trend. If it's above, it's in the uptrend. Below, it's on a downtrend. Price usually bounce off these lines like resistance or support. Anyway, so let's break it down to the daily now. Okay, on the daily, now we're gonna look for some key levels. So we're just looking for areas where price finds support or resistance. So here we find some support right here, where price bounce off that zone. And let's zoom out a little bit. Okay, so that's the closest one. We also can identify a gap right here. Let's add the gap right here. There's a gap right here. Okay, let's put this in a different color so we know this is a buy zone for the gap fill. Okay, so keep that zone. So whenever price comes here, we're looking for it to let me show you. whenever price hit this 549 level, we're expecting it to gap up. So here we're seeing what you call a wick fail bounce or inside bar. This is actually a bullish setup. So let's break it down some more. Let's go on the hourly. Okay, so we have the inside bar on the daily. The hourly, we can see like there's a little trend going on here. It's not more like a trend. Okay. So we kind of break that trend on the hourly. Well, it's not really broken yet. It's just forming a wick right now. So my point of interest right now is 544. If I get a nice bounce at this level, I'll take it. But if we break this level, 544, for weakness, for downside, I would look to get in below 544 for this level right here. You know what I mean? Just fill up this imbalance right here. Anyway, so let's top down some more. 30 minutes. Okay, in the 30 minute, this trend is still holding, respecting this trend line. Break it down some more. 15 minutes, still holding that trend line. It's the first 5 minutes of the market. It's usually the hardest time to trade. You got a lot of noise, price going back and forth. I'm trying to decide what direction to go. So I don't really want to trade this right now, unless I see something that really grabs my attention. But I'm liking this area for buy. This is the zone, the level I was looking at. Alright, so on the 5 minutes, we bounce off that trend line. What I want to see right now is if we're going to reject these moving average. So if I'm looking to go long, I want to get in above 545. If I'm looking to go short, I want to get in below 544. Alright, and for this account, let me see, position size, probably do like $500 per trade, $300 or $500 per trade. Just some small trades to demonstrate how this shit work live. Right now it's just a patient game. Remember, if we could fill this gap and break, we have what you call a gap and go, right? And also confirmation that they break the trend. But if we hit this gap and bounce, it's also a good level to get in for like a gap retest. But where it's currently sitting at right now, or how it's currently trading, it's not a good level to take a trade. Alright, let me go on the 1 minute so you guys can see the volatility, how volatile this shit is right now. See that crazy shit? Going up, down, up, down, up, down. That's not what we're trying to trade. We're looking for direction so we can make some money. Alright, back on the 5 minute. Patient, getting bored. But this is part of trading. No, I'm not gonna lie, I do not trade like this all the time. You know, this is the right way to trade. You know, it's more consistent, and you know, you're fully focused, you're looking for things that you know work or have a high percentage chance of working. But what I usually do is I get lazy and I see it bounce off this trend line and I just jump in. I don't wait to see if it's gonna shift trend by breaking these moving averages. Because once it's below these moving averages, chances are that the algorithm or other traders would use this as a means to go short, to buy puts. So it's not really like a buy zone once it's trading below these moving averages. But sometimes I like to scalp, so I would just hit this right here for a quick move up, in and out, make like 10-20%, and that's it. But or I would just try to chance, bet on it, just betting that it will continue going up, which there's no confirmation that will happen. So right now, this is what you call a tweezer bottom candlestick on the 5-minute, which is looking to form a engulfing candle. So, and it broke that 545 level that we wanted. So things are starting to look good. Now let's set up a different trading entry. This entry is going for half of this candle body for an entry. If price pull back to half of this candle body, this tweezer bottom would count legit, and then your stop loss would be below that level. So let's see if we could get this entry come down to half. Again, this is not the best entry. On a good day, your entry would be here, clearing all of these moving averages. But this is also another way how to trade candlesticks. This is just price action. This is without using moving averages. So anywhere in this level is a buy zone to validate this tweezer bottom. Alright, so it's coming down to that level. Yep, so I'm gonna take a stab at the long. Go long. What price we at? 545. We could go to 546. Got 3 of these. Boom. Alright, so we're in the trade. Again, go back again and show this trade, the way I took the trade. We're basing this trade off a tweezer bottom. A tweezer bottom is a reversal candlestick. To validate, your best entries would be getting in halfway mark at a tweezer bottom. Right? So that's what we did. It came down halfway on the 5-minute. We took the entry. It's betting on a reversal. So we're not getting in while the price is above, the target entry levels, which would be above the moving averages. But we're betting on the reversal based on price action, which is the candlesticks. So now let's set up price targets we were trying to get out. So we could target the highs, which is right here. If price pushes up there, we could target those highs. We could also target here, because there's imbalance here. Right here was a resistance before it got crushed, so we could target that level also. And the next target is, we could target here, the moving average. See if we get rejection from that moving average, which I think might be the case in this trade because we're looking weak. But let's see. Now we wait. So this was the first trade we took. Probably can hear the sound in the background. We're pretty much sitting in the car. It's all about patience. So that's the trade. I put in, I think, 450 or 440, making $20 so far. See our price respecting this tweezer bottom. It's reversal. I'm looking to see if we get more volume. Making 10%, $46. Not bad. Getting some strength going into that moving average. Let's see how much we up. Okay, we up $88. Not bad. But we're getting strength going up into that area where we have the moving average. So we might see some struggles at that level. We might reject it. Or we could break above it and go straight to our target. So this would be like, this yellow line would be target 1, this would be target 2, this would be target 3. So how I'm gonna trade this, each time it hits a target, I'm gonna set a stop loss just to see if it, reverses at that target. Like, that's what's going on right now. It's struggling at that first target. See? Got rejection there. We're still up $70. Well, let's just watch it, because this could be where we see some reversals. That I can't predict which target is going to respect. We can only hope that it, go all the way to target 3, but it could very much reject the first target and start reversing back to the downside. But let's give it a little bit more time. We can also use the trends on the EMAs for the lower time frames, to signal an exit. Like right now, this EMA line that we have right here, we could use it as a signal to know when to get out if we don't want to, chance staying in the move all the way through. So we could watch if price stays above this EMA and, stay in the trade longer. Let's get back to the 5 minute. It's better to trade with the 5 minute. The 1 minute will scare you out of your plays. Alright. So time 9:48, going to 10 o'clock, we usually have news events, all different type of economic shit that could change the trajectory of the market. So I don't like holding to after 9:50 because I know price action will most likely change during that time. So now we're at 49. We might just take that $49 and call it a day. See, going closer to that time, see time or price start reversing real quick. It's the thing with trading though. Like you gotta be decisive, like real decisive. You know what I mean? Like these moves can happen real quick. Like you could be up thousands or hundreds, and in a split second, the price just reverse. Like shit just change real fast. Especially this election market, like the pullbacks are crazy. They're aggressive. You know what I mean? That's why you gotta make sure you have the right position sizing where you don't risk too much because you could take huge losses on these reversals. And then if you have too much and then start reversing, you probably panic and then you get out of your position. You know what I mean? So this is where it gets real difficult. So you're seeing everything right now. You're seeing the whole what would you call it, process of trading. All right, so right now it's getting weak. The sellers are really getting in and they're aggressive. So this is our entry level. This is where we got in on this trade, and if we can't hold this entry level, then we gotta cut the loss and get out of this trade. Probably look for a different move. So let's see if we're holding, if we're bouncing off this level, or if we're going to reject. But these two red candles are very strong. So 9:51. We got like probably a few more minutes before we have to make a decision. We're looking weak as hell. Let's just see if we can recover. So a normal market, you know, without all of this election volatility, this trade would have been probably a very good trade. Like we'll definitely see some more continuation on the move. You know, we would see pullbacks, but they wouldn't be this aggressive. It wouldn't be this volatile. But because we're trading election market where news come out every 5 seconds. Traders just all over the place. Shit is just wild. You have to look out for these type of price action. But manage your risk, stay calm, and you can still make money. Just don't be too greedy. The smarter player was probably to use that first price target and get out, because I was not expecting the reversals to be this aggressive. So that's what really caught me off guard. I don't like panic selling when I see a big red candle. That's like the worst, worst feeling to get, like, oh, let me just sell, and then the shit just reverse, and then you end up closing the trade for a loss when you could probably wait a few minutes to see if it's really picking to decide to go down, or you don't get no time to think. I'm sticking to the plan. This is my entry bar. If it stays above it, I'll stay in the trade. If it goes below it, I get out the trade. That's it. Oh, and another thing, this is options trading. So it's not like Forex or futures where if you're getting here and the price is up here, you have to be profitable. Nope. With options, let me show you. You could be down while you're correct on the damn trade because of time decay. Bullshit. But that's what we sign up for. Anyway, price is going back up. Just doing this thing from red to green. I didn't expect to be in this damn trade for this long, but it is what it is. This 46 level is the level where last week the price was struggling at that damn level. Every time it breaks above 46 going into 547, like the sellers are just aggressive in this level. There's a lot of liquidity in this level. So I feel like if we really clear this level that I have right here, we're gonna see some strong upside. Like if we could really clear this level, I think we're gonna see 560s again if we clear this level. Let me show you what I'm talking about. See on the hourly, see this level right here. See aggressive sellers. That's like a key level. So taking my chances right now. So this style of trading is day trade. If you're working and you don't got the time, you don't have to do what I'm doing. You could like really buy this trade, set up stop loss, and go carry on with your day. But I'm just doing this so you could see the actual price movement, the freaking the thought process and everything. I'm looking at this trade right now and I'm like, yo, you know that the right entry on this trade would be the retest. This retest would be the right freaking entry. Alright, so we clear the first level. Let's set up our stop. Let's take some profit. We're back up 85, 94. Let's set up stop. So we try to take some off. So we'll put it for SL2. I like to keep a runner. So put it at 73, 72, something like that. I'll just take sell 2 and I'll keep 1 for now. Alright. We up 90, 80, so I'll probably get out. If it pull back, it's gonna kick me out. But it's the first TP level, so you notice I did not sell because you know we might go up, but I set the stop loss where if it pulls back, it's gonna kick me out. So, and I'm gonna make like $70 off this trade if it pulls back. It's still good. There you go. So I made $70 on that trade. This is the first TP. And now I'm going to continue going higher. And the next TP is all the way up here at 547. Let's see if we hit that TP level. So 39. This one is making 39, but I sold the others, so I'm gonna sell the close again. Now I'm gonna set a stop loss where I still make like $80. But this is a runner, so I'm not selling this one. This one is just gonna stay there all freaking day, and whenever it kick me out, I'm still gonna make my $80. So that's the runner. So confirm. God damn. Ooh. Wow. Just burst and go straight to TP2. God damn. If I held, let me show you how much I've been making. So this is 55. So I would be making $150 if I held for 2 more minutes. That's trading for you. That's the stressful part. But it is what it is. I'm comfortable. We still make money. So that's day 1. Tomorrow again, I'll probably do another video. And, you know, probably do this shit like a series, I guess. I don't know. Anyway, see y'all tomorrow.